let's get to our stock of the day, which is SiteMinder. So SiteMinder has launched its powered platform, and it's doing so in conjunction with a group called Muse, with its first partner, embedding its distribution engine into third-party hospitality systems, which SiteMinder, of course, says will unlock new revenue opportunities. Under the new system, hotels will be able to integrate SiteMinder's technology directly on their platforms without using the SiteMinder platform. So an evolution, so to speak, of SiteMinder. And shares have responded pretty well indeed, up 33 cents to $3.37, or roughly speaking, 11% right now. So let's find out what my guests think of our stock of the day, SiteMinder. I might start with you on this one, Adam. Do you guys cover it there at Shaw Partners? Do you know it?
Yeah, no, we don't cover it. However, I've been in and out of this one a fair few times, so it looks quite interesting, and it looks very interesting now that they've put this thing together, because it does feel like it's now starting to break out to the upside on this one, and I think for that that MEU or the Muse does give some more bullish commentary around what's happening. But it's also that the Australian accommodation software provider, which is SiteMinder, has more of an incentive, and Muse has more of an incentive to sell SiteMinder products in a partnership that could increase their overall access to new customers, as you said, Nadine. But this one does look like it's picking itself off the canvas, which is quite good. But we remember that SiteMinder has around about 7,000 properties that they use those channels, and they have their system in place with that. But that's really, there's around about 53,000 properties that they could actually have access to. And remember, it's not the large ones like Hilton, those kinds of things. It's that mid-tier space where those hotels sit. And it's maybe motels and those kinds of areas where maybe they've got 4 or 5 properties, but nothing like a Hilton or an Accor or something like that. So there's a lot of market share that these guys can actually take. And I think this is one step in the right direction for it. Obviously, the stock has been hit with the AI overlay. Can AI do exactly what SiteMinder does? And do you need SiteMinder to do that? But potentially with this new agreement, this does sort of somewhat cement SiteMinder as a way for medium-sized hotels and small hotels to keep that booking engine moving forward. So it does look good. And if this thing does continue to sort of rise, I think this is a buy, because this is the first turnaround from, as we saw on that chart, the sort of the peak and then all the way down, and now flattened out and now starting to move higher. I think if that momentum can continue, I think this one does look quite good for a quick buy or a good trade in the market.
Okay, so buy, but you'd want to be on it. You'd want to keep your eye firmly trained on the information.
Very
So look, Howard, this is a company that has been growing its ARR, growing its revenue. It's guiding for strong growth and improving profitability in FY26. What do you make of it?
Well, it can't improve profitability
when it's
because
not
it hasn't got
profitable.
any.
Yeah, but
so it would have to improve infinitely to be equal to zero. You know, it's a company that doesn't make a profit. It's a good thing they didn't call themselves ProfitMinder, because that would have been something the ACCC could have maybe got upset with them about. But being called SiteMinder is fine. It certainly won't be a good money minder, in our opinion, when you look at it. I mean, our members would look at this and they'd say it's been listed for 4 years. It's made big losses every year for 4 years. Its return on equity is about minus 40% on average per year, which means 40% of all your money in the company is evaporating in smoke every year. And look, in the end, it's a story. You have to come up with a new story every now and then if you're not making any profits, because you can't report your profits. And Adam may well turn out to be right in that it's a good trading opportunity, but as a long-term investment, you want to be invested in companies that actually make profits, and this isn't one of them. So Teaminvest members would look at it and shudder, so sell if you own it from us. But I don't know anything about the company. I wouldn't spend any time looking at it.
Yeah, got it. Well, honest answers only, as I always say, Howard. So thanks for keeping us real.